much is my business worth? Valuation is more of an art than it is a science. From a seller's perspective, they need to have realistic expectations. So what happens is, far too often, they price the business at whatever the seller wants for the business because they just want to get the listing, and that causes terrible collateral damage because you've set unrealistic expectations for the sellers. So now from a buyer's perspective, it's somewhere in the following. You have on one end of the scale, if you're going to make an investment, you can go to Las Vegas, put it on 17 black and get 35-to-1 returns. So you have those two, opposite ends of the scale. Somewhere in the middle is where a business valuation has to follow return on investment. You put your money into the stock market, over time it'll average about 11%. And there, it's a very liquid investment, meaning you put your money in. If you want to sell your stock, you sell your stock. You're not actively involved. Putting it under your mattress, putting it in Las Vegas, or putting it into the stock market where it's an 11% average return over many years and it's very liquid. A business is not a liquid investment because you can't just sell a business overnight. And so you need to get a better return. And so I look at this that you need to get a 25 to 33% return on your cash investment, meaning if you're buying a business for, let's say, $1 million, you have to be able to get in somewhere in the neighborhood. You're going to be paying a 4 times multiple, 3 to 4 times multiple. So that business should be throwing off around $250,000 to $333,000 in order to pay $1 million in order to get your return.